Let's just revisit what the market is up to in the meantime. While it's looking fairly quiet at this point in time, Pantaloon is one stock which is holding up in trade, 2.5% up in the green. Adani Port as well as Adani Enterprises, both these names as well are looking strong. And Tata Steel amongst the big boys is holding up by 2.25 percentage point. Let's bring in Mitesh then to talk about his trading ideas for this morning. Mitesh, what is it that you've identified?
Yeah, I've got three stocks. It seems I think Ashwini also picked all of this, all the three stocks in his recommendations. I've got a buy on Mahindra and Mahindra with a stop at 734.5 for a price target of 765. The overall pattern is very bullish over here, and I think, once this levels of 760, 765 are being crossed, my sense is that the stock could head towards 800. The numbers are very good, and the stock has been enjoying a good momentum on the upside since then. I've got a sell on Sun Pharma with a stop at 680 for a price target of 648, and a buy on VF Utilities with a stop at 423 for a price target of 460 on the upside.
Mitesh, thank you for those trading ideas. Let's connect with Indranil Sen Gupta, Chief Economist with Bank of India Merrill Lynch. Indranil, good morning. Thank you for joining us. Inflation expected today. So what is your number? Below 7%, between 7 and 8, or above 8%?
We are looking at 7.1.
7.1. What's the thinking behind this number? Because this is in line with the market consensus. The market consensus is 7.25, and your number is actually in line with consensus.
Yeah, I mean, we are expecting, agflation to compensate for the base effect of the last year's oil price hike. Effectively, I think one should see the number as 8, because if the government had hiked oil prices, it would have been 8%.
Indranil, how do you see food inflation panning out?
Food inflation will be on the rise, for the next few months, because given that we are faced with a drought, we are going to see food prices shooting up.
Is that the biggest worry? And are you constructing a scenario that for coming quarters or for at least 2 or 3 months, food inflation will remain in double digits?
No, not double digits, but 8%. Assuming that the government does not raise oil prices.
When do you think the real effect of a poor monsoon will kick in?
I think it's already begun to kick in. You've already seen, sugar prices go up. You've seen wheat prices go up. So it's already beginning to kick in. But obviously every month you will see inflation going up more from here on.
Indranil, global food prices as well have been on the rise. So do you think high food inflation is something that, both India as well as world economies are something that we're going to have to deal with for the next few quarters to come? And when do you think it could perhaps sort of peak out?
Well, the drought that we are seeing is really the effect of an El Nino. So an El Nino affects, not just India, it affects the whole world.
Right.
So, therefore you have, the impact on the rest of Asia, you have the impact in LATAM, plus the US is seeing a drought, so the worst in 50 years. So clearly, you're going to see food price inflation all over the world for the next few months. But then, if weather patterns change, and I understand this El Nino is likely to be a relatively shallow one, then we could see things starting to change early next year.
So in terms of a high inflation, high interest rate, a stagflation kind of a scenario, what do you think that will do to the GDP?
See, I think we are looking at a GDP of 5.8% for the full year. We've always said that second half of this year would see stagflation. That's kind of coming to pass. Of course, it's just not India. The whole world is seeing stagflation. And although, we are all very concerned about 8% inflation, there's still, 5.5–6% growth, which is far better than, a lot of other countries where inflation is running at double the real GDP growth. But yeah, we are going to see, quote-unquote stagflation, at least Indian style, for the next few months.
So Indranil, I mean, what is it that we can expect from the central bank? Do you think monetary easing stance is something which is a no-no, and that's something we're going to have to deal with considering the high inflation numbers?
Well, I think the central bank will continue to ease on the liquidity side to bring down lending rates. I don't think they'll cut rates. And, in my view at this point, until liquidity improves, rate cuts are not going to help. I think it's very important that lending rates come down, because this is the first time we are getting into a drought with high lending rates. In 2002, the RBI cut through the drought. In 2009, the RBI kept rates low during the drought. So this is the first time India is getting into a drought with high lending rates. So I think the central bank will try to, do OMO, cut CRR, etc. to bring down lending rates.
Indranil, despite a challenging macro environment and a sticky global environment, rupee has been stable. When I say stable, on a relative basis. But if things don't improve, assuming that if we don't get anything path-breaking from New Delhi, do you think rupee could crack below 60?
I think that the rupee is holding on because things are, like you said, relatively better here than everywhere else. I mean, if you look at India vis-a-vis the India we want it to be, things are much worse. But clearly, India is looking better than other countries. I think the rupee can go to 60 if the dollar goes to 110s a euro. So that's really a cross-currency move that we have to wait and watch. I don't think the rupee going to 60 has anything to do with that Delhi will or will not do. I think that's largely going to the impact of where we see the dollar.
Indranil, what is the silver lining in this gloom and doom? The fact that gold imports have cracked, do you think that will take care of your current account deficit?
Yeah, to some extent. I think the worst is over for the economy, but clearly, the next 2-3 quarters will be tough because of the drought. But we do think that, the first quarter of next year, you begin to see recovery happening, assuming that, the RBI manages to bring down lending rates, which are really very high. So I think, what I would say is that watch lending rates, where lending rates go.
So for the real economic growth to come back, do you think Reserve Bank of India has to cut rates? Because if I talk to your fellow economists, they are of the view that for real economy or for the real economic growth to come back, you need a lot of policy action, you need strong animal spirits, and low interest rates is perhaps one of the important variable, but not the key important variable.
See, I think lending rates have to come down with improvement in liquidity. Whether the RBI cuts rates or not cut rates is, I think, another issue. So I think I would stress a lot on lending rates coming down. Yes, if you get government action, etc., that's all to the good, but lending rates have to come down.
Okay, Indranil, good chatting with you as always. Thanks for taking time out. While we await the inflation data, the market is not really doing anything. At least the headline number is standing absolutely quiet. 53.43 is where the index is. Sun Pharma, Sterlite, Sequoia, Maruti, DLF, Siemens, Infosys, as well as L&T and Bajaj Auto are the ones under pressure. On the flip side, you are seeing some traction for Coal India, PNB, Ranbaxy, Tata Steel is a top notcher, Tata Motors is seeing some covering after taking a breather yesterday. Reliance and Kane amongst the oil and gas majors. Axis, Unilever and BPCL are the ones which are actually holding out in trade. What about the broader markets? Like I said, Pantaloon, Adani, all these are names which are holding out. Escorts and IGL as well have perked up quite smartly. Mitesh, your thoughts on Adani Ports as well as IGL, and whether or not you identify any trading opportunity here?
See, I think IGL was a recommendation a couple of days back around the 253 to 254 mark. I think there's still some upside left. What has happened is that after the big damage which happened in the stock prices, it went into a sideways consolidation, failing to get past levels of 250. It did that day before yesterday, and I think there's some kind of a up move starting. My sense is that we might actually see levels of 275 over here, possibly even 289 to about 290 is what I'm looking at. So there's still some kind of upside left in IGL. Adani Ports, also I think, while the chart is very good, it's just coming up against a very important supply point, which is at levels of about 120 and 130. So I don't want to buy it now. Maybe after a breakout, you would want to add on long positions. There's a good chance that we might see about 136, 137 on the upside over here.
Check on Eicher Motors. Now it's not a big gainer, but a gainer nevertheless. Let me just establish the Eicher Motor charts for you. Almost at 2100. Volumes, it's not a very liquid stock, bear that in mind. But this year Eicher Motors has appreciated by a good solid stunning 40% plus. Bear in mind it's a it's a auto stock. They derive about 85% plus of their EBITDA from just two segments, which is CV and UV. If economic conditions are down, companies which have exposure to CV business, they tend to underperform. But Eicher Motors has been a marked outperformer. Mitesh, what are your thoughts on Eicher Motors?
Well, I've not been, really tracking the stock, so it's difficult to give a big view. But what this stock has done is that in the last few weeks, corrected, gone through some base building around the 1900 level, then is bouncing back. Good chance that if the stock remains above lows of about 2030.